Alright, guys, so we have big breaking news today, and this is a big twist in the trade war, especially when it comes to the US China fight. Now, it's one big struggle, and Trump can't take on Beijing himself, and that's why Besson backed down and extended the truce. That's why Trump was demanding China to give them rare earth magnets. And there's no smoke without fire. China has managed to insulate itself directly from US markets, and we have to hammer this fact in further. Now, Chinese exports to the US used to be enormous, over 7% of China's total GDP, but it's only 2.7% today. The Chinese economy is growing at over 5%, which makes them Trump proof. Even if the US imposes a million% tariff on all Chinese goods, whether it's smartphones or plastic toys, the economy won't collapse. They will still experience decent growth. Now, the boomerang, however, will hit back on Trump's economy. US consumers will be left without affordable Chinese goods, and knowing the state of American consumption, it's not looking good. And just think about it, you cannot afford to cut away products made in China. You will cut away your deflation lifeline, especially when you are tariffing the rest of the world. Consumer sentiment in the US is still broken. Inflation expectations for the next 12 months is nearly 5%, and that's far worse than what the BLS is trying to sell us. But the real doozy comes from the long term expectations. The 5 to 10-year inflation number is rebounding up to 4%. And this is a problem not just for consumers, but for the entire system. Now people will start buying less because inflation is expected to stay higher for longer. How can yields possibly come down? Buyers, they want a better return. So Trump can't punish China directly without crippling the US economy itself. And here's where things get really dark. Remember when Besson floated the idea of Fortress America? The idea of Canada, Mexico, and Europe coming together to essentially boycott China. Well, here's a crazy recap of the plan.
So I saw you say on Bloomberg recently that Mexico has offered to match the U.S. tariffs on China and that you would like for the Canadians to do so as well. You described it as a fortress in North America. Is that in the works?
I don't know yet. We'll see. The Mexican leadership has offered to do that. We haven't heard from the Canadians, but I think that'd be a very good start.
Now, this sounds ridiculous and self defeating for the Western Hemisphere, but the truth is stranger than fiction. We now have an update about Fortress America. Mexico is moving to raise tariffs on Chinese imports. They are now about to bow down to US orders, which is really tragic. The Mexican government plans to hit Chinese cars, textiles, and plastics as part of the tariffs. Now, the idea is to protect domestic manufacturers from Chinese competition. And this is exactly what Scott Besson wants for all US allies and partners to form a united front against China's export economy. Basically, a united embargo to block out Chinese goods. And the aim is quite simple: either force Chinese exporters to lower their prices and become uncompetitive. Now, that's plan A, or plan B, force Beijing to give Trump more concessions. Now, maybe it's total access to critical metals. Maybe it's for China to buy more treasury bonds. Maybe it's for China to drop their 10% tariff rate to zero. And on the surface, it looks like China is about to take a big hit. Now, China's trade with the entire Latin America is over $140 billion in the first 6 months of 2025. Now, trade with the continent increased by 7.3%, which is massive because the potential is still growing. And to Mexico alone, they export billions in cars, auto parts, and smartphones. A ton of them are intermediate goods and inputs. So, yes, Chinese exporters might take a hit, but so will Mexican factories. And here's the irony: what Trump is doing won't ultimately help the US economy. He just raised costs for US consumers because now all Mexican goods will start to cost more. This gets worse because China will retaliate. We don't know how and we don't know when, but Mexico has clearly chosen a side now. They have chosen US foreign policy instead of free trade. Well, BYD has shelved their plans to build a major Mexican car plant over the trade war. Some people say it's because of potential technology leak, But in all seriousness, it's more about geopolitics and unstable US economic policy. Now, China probably views Mexico as an extension of the US economy now. They are slowly becoming a manufacturing colony, which means building a factory there is really, really, really dangerous. Now, why build a factory in Mexico now when your inputs from China will face a bigger import tax? A lot of BYD parts comes from mainland China, and that's not all. Tomorrow, Trump could wake up and ban Chinese vehicles made in Mexico. So now production can't head north. Now, BYD or any other car company will be stranded in Mexico. There's really no point. If exporting cars is your game, you might as well build it elsewhere, won't you? Instead of Mexico, BYD is building their car plants in Brazil. The first EV has rolled out of the Brazilian factory. Now, the initial annual production will start at 150,000 vehicles before wrapping up to 300k units in phase 2, and the production here will flow to the rest of Latin America. And this is the amount of investment and jobs Mexico will be losing. Punishing China is really a short term fix. Yes, you do get to prevent export collapse to the US, but you're going to get squeezed year after year. Now, Trump's ultimate plan is to move car production back to the US, so sooner or later, he will sacrifice Mexico on the chessboard. Might not be tomorrow, might not be next year, but a day of reckoning is coming. But let's pivot to our next story, which is equally wow. Remember Trump's vendetta against the Federal Reserve? Well, he has taken this to an extreme level. He has moved to fire Fed Governor Cook, and at this point, the reason doesn't even matter. The underlying motivation is to shake the Federal Reserve to ensure he gets massive rate cuts. And because of that, the entire US Treasury market is in chaos. We are moving towards a situation of higher inflation and higher bond yields. The wealth divide we see today is going to get supercharged like never before. Now imagine forcing lower rates when inflation is already rebounding. Imagine what people on Wall Street will do with all this cheap capital. They will start buying up assets like no tomorrow and force everyone else to the sidelines. In December, the market expects the Fed to cut rates quite aggressively. There's nearly a 100% chance of at least one rate cut, but nearly 85% odds of 2 to 3 rate cuts. So now the cost of capital in the US will be forced lower. Yes, it's artificial, it's not organic, but Washington doesn't care. They need to lower the cost of borrowing to allow Besson to borrow even more money. Now, what the US is facing is basically a funding squeeze. They are firing on all levers to get money to fund the federal government. And that's why they are squeezing big tech revenues, and a big part of the tariff war today revolves around this. Now, just listen to Besson bragging about how much tariff revenue he's bringing in. But behind the song and dance, there's a lot of contradictions in his little speech.
President Trump and I are laser focused on paying down the debt. So I had been saying that tariff revenue could be $300 billion this year. I'm going to have to revise that up substantially. So I think that we're going to bring down the deficit to GDP. We'll start paying down debt. And then at a point that can be used as an offset to the American people.
Now, firstly, where's the tariff revenue coming from? It's from US consumers, your own people. The trade war is transferring wealth from the private economy to government coffers at a really crazy rate. A few days ago, Besson also bragged that tariff revenue will hit $500 billion a year. Half a trillion sounds great, but it's virtually unsustainable. People will slowly start to buy less stuff in the months to come. Secondly, you are not paying down debt. That requires you to spend less and for rates to come down substantially. And when I say rates need to drop, I'm talking more about long-term bond yields. Well, look at the disaster going on. Long US bonds are plunging because the inflation threat is slowly wrapping up again. Yields on a 30-year bond is about to crack 5%. Why? Because price pressures are probably going to rebound. Firing Governor Cook and just threatening the Fed in general is not a good look. There's a big disconnect in the bond market that we have to address here. So if rates in the short end are coming down, why are rates on the longer end starting to go up? Why is the cookie crumbling? is because the US economy is about to enter a world of stagflation, higher inflation, and slower economic growth. And what is left is basically an engine being propped up by government spending. This is why yields of the long end are going higher. It's because the investors want a higher return to hold US bonds for 10 to 30 years. And here's how serious things really are. In the US, the gap between the 2-year and 30-year bond yield is now the widest since January 2022. And let's break this down in simple English. This gap tells us growth is starting to weaken in the US. Meanwhile, investors are sick and tired of US bond issuance. They're not happy with US deficit spending. Now, does this mean we are entering a recession? Not necessarily, but it does mean that the debt pile is going to rise and the dollar is probably going to weaken a lot. Now, the people on top, Wall Street, they're going to borrow a ton of money on the short end and pile into risk assets. And that's why we are seeing stock prices and even gold prices defying gravity. It's like an open goal for them because the US government is squeezing the middle class to keep the game going. So, yes, until something breaks, we are probably at the beginning of another big melt up in asset prices. And this is the state of the modern economy today. Besson wants to keep the system floating along, so a segment of the population needs to be sacrificed. And once again, we have to mention this. It's stock buybacks that's driving this new bull market, a big factor of it. It's the lure of companies buying back their shares that is getting retail demand. Now, over $1 trillion in buybacks, a ton of big money is coming from US tech companies. Apple, Nvidia, Alphabet, they're all piling in money because there's no way else to really invest in. So imagine what happens when rates start to drop in the short end and the dollar continues to drop. A ton of US investors will be in panic mode. Running to US bonds isn't the solution anymore. Now, some might buy gold, but I bet a lot will be swept up in this new stock market melt up as well. So the situation is not that great. I hope we can take this situation to survive, and if you can, use it to thrive. There's really no stopping this trade. The US wants to win this trade war no matter what, and the only lever they have left to pull is massive government spending. They will push the bond market and they're going to push the dollar to their limits. But let me know what you think. Will Mexico really punish China for Trump? And how far can Besson push the US economy before everything just breaks? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.